Okay, so I just want to point out this is the previous earnings on April the 30th that Amazon reached its intermediate high. At this time, at this date, it was essentially at its all-time high, meeting its all-time high, and then retracement, and then the next day, which is the next month, May the 3rd, who would have figured it would have crashed all the way from this Fibonacci range to this next key range right here, this next Fibonacci key range. No one would have figured that out until you look at the insiders trading and you see that Jeff Bezos, moving back a little bit more, Jeff Bezos started to sell on May the 3rd. May the 3rd, and then he sold each subsequent days from May the 3rd all the way to May the 10th. And he sold a total of almost 1.4 million shares. So he allocated 1.4 million shares um, at that right after earnings to be sold. Now he didn't allocate. His fund manager or who his financial advisor have that allocated for him. Automatic sale. As you can see, it's an automatic sale, so it's already in writing. Now they don't tell you ahead of time that this automatic selling is going to occur on specifically this date or these range of dates. Unfortunately, the SEC has that information, but the public do not have that information. The fund managers or the financial managers for Jeff Bezos had already allocated X amount of shares, a total of his allotment, to be sold from May 3rd to May 10th. As a result, Amazon, after superb earning and at an all-time high, went essentially from 35.50 to a low of 31, close to 31.50. So that's 400 points. 400 points as a result of Jeff Bezos' automatic sellings of his quarterly allocation. Now, you can argue with me that this is just a pure coincidence. You can argue that, but the data says there's a correlation there. And if you backtrack his allocation of shares, you will see that every day, for the most part, every date or range of dates where he allocated to sell his where his financial fund manager allocated to sell his allotment of his shares, those days has been down days, and it had always occurred at the beginning of the month. So in this case, it was May the 3rd, and then the previous one was actually 6 months ago in November. I believe it was November the 5th or something, but there's always a Monday. It has always been a Monday of the month. Um, so he should have sold his next allotment August the 2nd. If you look at right now, you don't see, only Rubenstein sold his automatic share on August the 2nd. So August the 2nd, his Jeff Bezos did not allocate, or his financial advisor did not allocate to sold. So what is the next date? Well, it's September 1st. Unlikely, because he had always sold it on a Monday. So therefore, September the 6th. But I don't think so. I don't think Jeff Bezos, is actually going to sell this quarter, which means it will be the next another quarter, which will be put it in, I guess, 6 months from So May the 3rd, 6 months would be November. So that would put it in November is when, right here, November the 1st is when Jeff Bezos will sell his next quarterly allocation of probably more than 1.4 millions. It's gonna be around 2 millions or 1.8 millions. And at that point, you're gonna see another, and it's probably gonna be right after earnings. He's gonna sell it. He's gonna sell his allocation right after the I guess the November um, earnings is when he's gonna sell it. But actually, I don't know when Amazon is reporting earnings, so we need to look at that closer. When that date come, I'm gonna pay a little bit more closer attention. There is a chance that he may still sell his allotment next month. He's just his financial advisors are now catching a note of what happened here on this range right here that caused this 400 points drop. And then his advisor and then the SEC or whatever they telling his financial advisor say, hey, you cannot just sell because this whole selling right here trigger Amazon to I'm going to use the word mini crash or a large correction, which also correlated with the QQQ or the Nasdaq. So here's the Nasdaq, its response to that selling of Amazon and further selling off. And you can say, well, it's not related. This is market, dynamics, market news. The stock markets will correct that time. Yeah, okay, you can make that argument. It just happened to correlate with when Jeff Bezos was selling his quarterly allocation. I will tend to look at that data. I'm not a conspiracy theorist, but I'm just looking at data and I'm finding correlation. And so we will find out next if that data is correct. We will find out when Jeff Bezos sell his next quarterly allocation. When is his next quarterly allocation? It should have been right here, but he did not. His fund manager did not sell it. So what's going on? Why didn't they sell it? He has a bunch load of shares that still need to be sold. He has allocation every quarter, and there are a lot because he's no longer the CEO. He's no longer obligated to hold his shares, or he's no longer tied directly to the company as far as insider trading. He is free. He has less leverage or less culpability as far as selling his shares, and he's already reported to the SEC that he needs to sell. He now needs to profit. He has a divorce. He has, he needs to sell these shares to meet the demands of his lifestyle and his pet projects. So why did he not sell it? Or why did his fund manager not sell his quarterly allocation? I don't know the answer to that. I can only think that they knew from this results and now they are responding because they noticed this whole, let's go back to Amazon. They noticed this whole event that results in 400 points of droppage, 400 points of correction. And they go, well, let's just hold off on the selling because it would have happened. Let's see what 8th the 2nd would have been like right somewhere right here, it will have resulted in a collapse to this level. So it would have went from 333 all the way down to this point, a total of almost 200 points. And so they're not I suspect what happened is they pull back on the automatic sell and they're gonna hold off. So it won't correct. But how long can they hold off? At worst, I think it's going to be at worst it's gonna be next month, but I suspect it's gonna be 6 months from now, which would put it in November. And hopefully in November they are hoping the price of Amazon will be at a higher price. And I think it would be at a higher price because like I said, I think there will be a time where all the profits from these guys on the short side will start to move the opposite direction as enough time and enough people will forget this damage, this pain, and it starts to go up. And at which point, I'm thinking anywhere around here in November is when Jeff Bezos' advisor will start to sell his allotment. And it may be massive because he got like 2/4 of shares. So we're talking about close to anywhere between 2 million to 3 million shares that he needs to sell to the market. And there's just not enough buyers. So it can drop from 500 back down to 3,200 in a heartbeat. Not in a heartbeat, but it'll be something like less like this. Every day would be low of days, low of day, low of day, low of day. And at that point, you should be able to profit quite a bit. These put options will make you a lot of money, even though the volatility of the puts, meaning the value of the puts, it's going to be all the way up here at 35, maybe even 40. Somewhere up here, it's going to be very expensive. But just because it's expensive does not mean, it's not going to be worth it because the value of Amazon, even though the options are expensive, Amazon, the value will dropping 300 points or whatnot. You still should be able, as long as you buy sufficient options at a reasonable price that is further out, um, meaning, let's just say at 3,500. You can buy the option at 3,400. It won't be cheap, but it'll be sufficient enough where you can put 5,000 and make 20,000. And that is probably what I would do when Bezos um now we don't know until after the fact. Unfortunately, it's going to get sold doing real time, and we're just gonna have to guess that it's being sold because you're gonna see conditions where allocation of like 100, 200 shares are being just sold to the market, maybe even more. Just gonna be a lot of, and the algorithm is gonna see that. It's gonna see these like boom, drop, boom, and it's gonna go, something is going on, and then once the algorithm latches on to these selling, oh my goodness, it just the shorts are gonna pound it, and then once the shorts start pounding, the hedge funds and even the institutions, they're gonna say, "What's going on? I'm just gonna get out. I'm just gonna get out. I'm just gonna get out." And what's gonna result in this is what they call an elevator down. This is an elevator down. This is an elevator down. Um, and I think Amazon, as long as Jeff Bezos continue to sell his quarterly allotment, now that he's no longer a CEO, I don't even know if it's going to be able to get to this high again of close to 3,800 or 3,750, whatever this high of all time. I don't think. Yeah, I just don't see it happening, but it may. Anything can happen. Even though the Feds are tapering, so it's going to be difficult. We're just going to have to see, eh, you know, if it happens or not. There's always going to be another engineered push slash short squeeze where you got this wicked run up of just pushing, and you just got to chase. And when that happens, you just gotta either sell the options of the puts, or buy the call options. You will not be profiting if you sell the straddle, which means if you sell both the puts and the calls of the call option. um, you will not profit because the put option will kill you. Essentially, I'm sorry, the call option will kill you because the call option will go up too high, too much. Looking at the market, so the QQQ, um, it's going to probably be range bound now that we know that the Fed has said pretty much the FOMC meetings has stated for that July minutes, they're gonna start tapering, which really just means they're just gonna reduce their FOMC bond purchasing allocation. They're still gonna be buying, it's just they're not gonna be buying as much. I don't believe the market will crash anytime soon until the first sign of a rate hike, which will be next year. And even then, the first sign of a rate hike would be only a quarter basis. That's 0.25. That's not going to be enough to trigger enough fear where you're going to see this kind of scenario that happened right here. That this whole pandemic kind of thing where everybody just want to get out. This will probably happen when it gets to half a basis point. If it gets to half a basis point, which is zero point 0.5 on the interest rates, with in conjunction with increased inflation, which is kind of funny because you say, well, if they're increasing interest rates, why would inflation? Well, it's a condition called stagflation, where you have enough inflation and you don't have enough growth, um, but so your interest rate is still relatively low at 0.5 or half a basis, but you don't have enough growth because it's no longer at zero and the Feds is reducing their bond purchasing, and so it's just going, and the inflation is still a key factor, so they're having they're trapped at that point where they cannot reduce interest rates, and they cannot stimulate enough growth. So at that point, then you may see another one of this probably won't happen, to be honest. You only see this during crazy time like the pandemic, and I'm surprised they stopped it so quick because you see this is only 4 weeks. 4 weeks it's really just a month and a half of where this happened at the peak, which is in February, mid-February, and then this is, yeah. So it's really just a month to have this massive correction. That's nothing. Um, so I don't think, I mean, but it's so high right now that you say, well, what is it gonna do? I mean, it can probably get to new high. It doesn't even matter if it gets to new high. The point being, with the idea that it's gonna start tapering, and you can see the Delta virus is now starting to go down. This is the U.S. Or at least it's plateaued. The U.S. and then in the world, it's pretty much plateaued as well. So a plateau in COVID. There's no reason for fear. Not fear, but actually the opposite, right? They actually think the opposite because they think if this continues to go up, that would means that the Fed will reduce interest rates or at least increase or they won't taper. But the fact that it's actually the opposite, which is funny, the fact that this is starting to go down because now they see it's flattening of the curve and it starts to go down, that actually put more fear into the market. Is opposite thinking. It puts more fear into the market because now they're worried about inflation, worrying about the Fed tapering, aggressive tapering, and eventually reducing or increasing interest rates to fight inflation. So the market is gonna be range bound, which is okay. I mean, you can still make money range bound. As the only thing you have to worry about is a crash scenario. You're gonna see correction like this. Corrections will happen. That's bound to happen that time. And at this level, it may be prudent to anticipate a correction because here you got 1, 2, 3 weeks And this is 1, 2, 3, 4, 5 weeks, so it's long overdue for a mini correction, anywhere, from the high right here, which is 342, all the way to a low. That's a good 30 points, almost 30 points, 25 points. So yeah, it can definitely go down to 350 and meet up with this line, because this line was penetrated. So it can meet up with this line and even go below it to somewhere like here, spike down and up. So that's probably the most prudent and most conservative, or the safest. Even if it goes up, you know, eventually it's gonna go down, right? It has to. It's overdue eventually, is what we're seeing here. But anything can happen. It's so difficult to say, even though you say it's flat now. So if it's flat now, it has to go down. It doesn't have to go down. It can go up. There's no reason why it can't go up. It's just, you know, risk reward management is what I'm focusing now. And risk reward management tells me that it's probably safer to play small, play safe, and be wary, and don't be get caught off guard, because at any time you can see this correction. It happens really quick. This is in May the 3rd. Actually, May the 3rd is when Jeff Bezos was selling his shares right here, May the 3rd. Actually, no, here's May the 3rd. I'm sorry. This is May the 3rd, this whole correction. So it may line up with when Bezos is selling his shares, but I don't think he's selling his shares. So if he's not selling his shares, it's still, you can still get this correction. So that's it's gonna be fast. It's gonna be quick. That's my anticipation. I would be staying away from the stay-at-home stocks. So anything like TTD, Zoom. Zoom should not. Zoom is probably gonna correct. Any upturn on this guy, um, I don't really like shorting that much, to be honest, but it may be worth it. If the thing with Zoom was, I knew, at what point I should have paid more attention at this failing signature, because this failing signature, you can see this intermediate top, near the 50% retracement. The next time it tested and failed, that was the perfect time. That was the perfect time to short it. But at this point, it's kind of, I don't know. The risk reward isn't there. I should have paid more attention to it. I just didn't. Roku, you can say, well, Roku is at a good level. I mean, this is a good stock. It recovered from the 200. I like Roku. And from a technical perspective, this looks strong, and maybe it'll go to this level. Even though Delta virus is kind of plateauing, it's not gonna plateau all of a sudden and retrace. It's still going on. It's gonna take a while. So you have a risk reward scenario that's in favor of Roku at this point until at least another month or two, before there's enough data to show that yes, it is now on the decline. The curve has flattened and started to decrease. At which point, it's the reopening of the whole economy, and the people able to go out and shop and whatnot. Then at that point, Roku, the risk will be too high for anyone to be holding on to it, because there will be less people indoors. So something like Roku would start to decline. But at this level, I think this is a good buy. In fact, I probably will buy this in my 401k come Monday. Um, Despite the fact that, I think the market can correct at this level. I was mentioning how it's bound to correct. You gotta play with what the chart tell you. And in the intermediate level, the charts tell me that Roku is a good buy. Netflix, too high, and this was probably a potential short at some point where it tries to muster enough, of a short covering rally, momentum push, anywhere up here, 560, probably would be a good short. If you don't like to short, you can sell the call options. Selling the call options up here, dated out at least 2, 3, at least a month. I would date it out at least a month. Would be, a good strategy for risk reward. Other than that, you want to stay away from Amazon. As far as on the upside, I don't think it's gonna master this explosive movement. The only thing is the chart. Like I said on my last video, this doji tail candle is a reversal candle, and therefore it is a intermediate, a short rally's potential to go to this 200, maybe above the 200 to the 38.2. So if you do play, it's gonna be on a short-term basis. I would be playing because I like Amazon, and the options on Amazon has enough value for me to play. On the safe bet, I would go with like a Google on a correction. Google is very strong on a correction. Microsoft is another one. Microsoft is always so strong, but it's very expensive. Yeah, I would not be touching Microsoft at that point. At this point, this short squeeze. These short squeeze can be so powerful, to be honest. Like it can easily keep going to 325. I mean, you're like, why would it be so expensive? It just That's just the way it is. Yeah, they can just squeeze it all the way to that level. So trying to tam the top. Tamming the top is not something you want to do. Likewise with tamming the bottom is not something you want to do on explosive stocks. Stocks would have lots of options and lots of short interests. CMG, another one where you really don't want to tam the top as well. It's just it can easily go to 2000. You say, what? It got to correct. I mean, look at it. It's flattening. Yeah, it's flattening, but it can still go to 2000. I would stay away from. There's always another stock to be able to play instead of, risk reward management is very important, for my strategy at least. On this account, I'm sticking with risk reward management, because I don't like to see any loss on this account. My strategy on this account is to really not see any loss on a weekly basis. So the strategy on this account is a risk reward strategy, so I can get consistent growth and consistent cash flow. And I want to test that strategy out and see if it's prudent. And so far, it has worked for the last over it's almost been half a month, half a year, so 6 months. Um, Apple again, Apple. Yeah, I don't know what to say about this stock. It's difficult to play. Tesla. The only thing about Tesla is it's a very powerful stock in movements of both directions. So for Tesla, I would only be playing at extreme, right? So at extreme would be somewhere where it actually penetrate down here. Maybe even wait for it to touch the 200, to be honest. Like maybe that touching the 200 would be a safe enough level for me to get in. At this point, it can do anything. And for a risk reward management strategy, I'm just not gonna, touch. There's enough plays. I mean, on a risk reward management strategy, you can just pick one stock like Amazon and make money on it, to be honest. You can just stick with one stock. I'm going to other stocks just to show you, but really, if you have sufficient income and you want to just make consistent money and have it as a, a risk reward kind of thing, Amazon is sufficient as long as you don't get caught on these scenario, or even if on these scenario you play it correctly. Um, the other one is stay away from BABA for now. I mean, there is no reason to even be in this. Yeah, just this is the death. I do have a few. I mean, I don't know how many I have, but I do have some shares of this in my 401k. So I don't know what to do. Whether I should sell it or not, it's hard to say. Um, Nvidia, yeah. So the stocks that probably gonna be pretty good to play. Nvidia is always expensive, but Nvidia is a safe stock to play if there's a correction because of the whole cryptocurrency and cryptocurrency. Like grayscale Bitcoin. This is any correction or retracement. Any correction or retracement on these type of stocks like Graycorn, Bitcoin, Cornstar, Coinbase, this one, any correction on these type of stocks, even MicroStrategy, right? MicroStrategy, AMD, Nvidia, cryptocurrency is not gonna go away, so there will be opportunities where fear will take over these stocks and it'll correct. AMD is the other one, Nvidia, Cornstar, Greatcorn, MicroStrategy. Um, yeah, they're good. AMD is so expensive, so I wouldn't be buying it anywhere until even at 90 it seems expensive, but at this point it's probably sufficient to buy in my 401k at 90 or anywhere around here. If it doesn't get there, I don't care. There's always something else. I'm not worried about trying to make $1 million, on a sudden stock. That's not what the strategy I have right now. But that's about it. That's all I can say. And hopefully things will work out for you.